Good afternoon, everybody, and welcome. My name is Anthony Kazazis, and I am the director of the NYC Network Group, as well as the NYC Real Estate Expo, and soon to come, One National Real Estate, One NRE, a company that will be offering webinars nationwide. I want to thank you all for registering for today's webinar, Latest Trends in Business Purpose Lending, Short-Term and Long-Term Financing. Fix and flip loans, ground up construction, long-term rental loans, including long-term financing on short-term rentals. Our sponsor for this webinar is Templeview Capital. TVC Funding is a national private portfolio lender that offers flexible financing for investors, brokers, and lenders in residential real estate. Founded by entrepreneurs with more than 20 years of residential mortgage and real estate investment experience, TVC Funding has been at the forefront of innovative product development since its inception. Utilizing a common sense underwriting approach, deep commitment to the customer service, and well-capitalized balance sheet, TVC Funding enables real estate investors, correspondent lenders, and brokers nationwide to optimize financing efficiency on real estate investment projects and rental properties. Today's speakers are Doug Perry, Director of TPO Sales.
I've been called worse.
of Templeview Capital. Welcome, Doug. Mark Birch, Director of Business Development, Templeview Capital. Welcome, Mark. Brendan Boyle, Director of Operations, Templeview Capital. Welcome, Brendan. I will be back in 45 minutes. I'm going to disappear and let these guys run their beautiful webinar that they have today. I'll be back in 45 minutes. Please, if you have questions, please upload them in the Q&A section. So when I come back, I can read them off don't put them into the chat section. Templeview also will be receiving all the register attendees' names and contacts. So they will also be sending out a contact page where you can continue asking them questions thereafter. Right now, if you want, on the chat section, I did upload each of their emails and their phone numbers, so you can reach out to them right away if you need to. Ladies and gentlemen, without further ado, Doug Perry.
Anthony, thank you so much for that introduction and the opportunity to join the viewers on today's webinar. Really excited to talk to each of you and talk with Mark and Brendan. We'll get kicked off by giving you a little bit of a background about ourselves. So I've been in the mortgage business here. I'm actually in my 4th decade of mortgage lending. Got my start at a little company called Countrywide Home Loans, where I spent 18 years. After that, ended up at IndyMac Bank. The financial crisis hits, and I joined my first startup, PennyMac. I knew that crew from my Countrywide days. When I say it was a startup is because I was employee number 35 at PennyMac. Spent a little bit of time at some regional lenders and then got into business purpose lending, a topic we're going to talk a lot more about today. Business purpose lending, I was working with a company called 5Arch. 5Arch ultimately was sold to Redwood Trust, a publicly held company. Redwood acquired Corvest, got a chance to work at Corvest. And now I'm at Templeview, where the three of us on a regular basis are scouring the globe looking for investors, brokers, and lenders who need a cheap, abundant source of capital, which is what we provide. Templeview, and Anthony gave us a great description of Templeview there. Templeview is a national lender. We're a private money lender. We are in our 15th year of existence. We got our start during the financial crisis, buying distressed assets and repurposing those assets. And it was during that process of repurposing, we realized there was a big void in financing. It was financing for investors. Investors could not get competitively priced loans to help them buy homes, to help them rehab homes, to help them buy rental homes. That segment just wasn't being catered to. It was primarily through a small group of hard money lenders where the terms were somewhat onerous. The leverage, the amounts you borrow relative to the acquisition and the project cost was very low, so they couldn't borrow a lot of money, and the rates and the fees were incredibly high. So we saw that void and we wanted to fill that void by providing good, high quality investors, people that want to buy rental properties, people that want to buy properties to fix and flip. How can we loan them enough money so that they can do the project successfully as well as do that at very competitive rates? And that's exactly what we're going to talk about today, is how you do that. We're going to get some input from some experts here, Mark and Brendan, that are really leaders within their field. And with that, I'll hand it over to Mark. Why don't you give us a little bit about your background, please?
Oh, thanks, Doug. And 4 decades. So I guess I'm in my second decade. So I started out of college, and then I started in the residential field, doing residential mortgages. And the best time before lately to refinance, and I saw that craze. And a couple of the friends from college were doing wholesale mortgages at a company called First Franklin, the home of the rapid refinance. If people know what that is, you know, you pay your mortgage for 13 months. We'll do 80% cash out. Do you have a pulse? The ninja loans, the Nina loans, all that fun stuff, right? I think our company was featured in The Big Short, which is fun because we were owned by Merrill Lynch. So during that time, I got a taste of the wholesale mortgage industry. From there, I actually joined the team are the current owners of Templeview. And like Doug said, we bought defaulted note pools and we worked them out. I was actually an asset manager, got really involved with property flipping, because that's what we were essentially doing. We were looking at the ability to take a house value and increase it, and in doing so, we were doing renovations, or there would be a certain point where we said, you know what, just sell it as is. And we did see, when we sold properties as is, we kept the pulse on them and saw how they performed. And we saw that we were leaving a lot of money on the table. So in about 2015, I started getting involved in house flipping myself, and started getting some rental properties underneath my belt. So took advantage of what we were actually selling. And then when Templeview came out with their products, that's kind of why I joined them as business development manager, just because I had the experience as a wholesale mortgage rep, as a real estate agent, as an asset manager. So I'm kind of entrenched in building relationships with people, with TPOs, with builders, with lenders, and we take our products and we scale them. All right, and the cool thing about being in business development and being able to produce some of these loans, through business itself, it came into us, sitting in a circle talking about things like, why don't we have financing for huge, Airbnb short-term rental loans? And we start talking about it, and sure enough, we find a way to come up with a loan that we can share with our customers to be able to use it. And so currently, I have about 20 Airbnbs that I currently own and manage. I have flipped over 20 homes. I've done numerous of joint ventures helping other people succeed. I have a local meetup in my market, and happy to be here. Thank you.
Mark, thank you so much. And I think what Mark's talking about there, not just his experience, but at Templeview, we're investors also. We're in this business. We're not just doing it for the financing. This is our livelihood. We live it. So it's a really, really important differentiator for Templeview. It's a lender. At its core, we are investors. So we understand what the investors need. And that's very unique and very different from other companies. Brendan, why don't you tell us a little bit about your background, please?
Yeah, unfortunately, I can't start off by saying about the decades in the industry.
This hurts, guys. This hurts. I'm feeling old already.
But no, I've been with the company for a number of years, 7 years. With Mark Birch, we were working in the non-performing notes, working on these properties that are in some form of way default, and seeing if you can make a manageable asset out of that, whether you're flipping that home, short sales, deed and lose. And that kind of transitioned into Templeview Capital. At Templeview Capital, I have a mathematics background. So we started off in sales and kind of growing the company organically when T launched in 2017. And through the years, adding additional tools or looking at lines, I've joined the third-party origination channel. And a big piece of the third-party origination channel is looking at our competitiveness on our products between us and a lot of different other lenders. You're not only looking at how you can be competitive in the market space, but you're also looking at what can we do better? What could we add that's different, or what could we add that's new? And then also having people on staff such as Mark Birch, who's an investor who's living this. We get feedback from that, and we could create unique programs that we can expand out on a number of our offer to our client base. So I've been with the cardio channel for about two to three of the 7 years now, and really expanding out on creating processes, looking at underwriting guidelines, really mastering the guidelines and the requirements to make sure that we're offering not only a safe product for the company, but a safe product for the borrowers when they're writing these loans and they're originating, that hey, they have a strong lender in the back who's going to service their loan, who's going to keep them, keep them happy during the term of their loan, but also give them a stellar product that's competitive in that market space.
Brendan's being very modest here too in his experience. Most of us specialize in one aspect of it, sales, operations, technology. And in addition to Brendan being one of our best salespeople and being a master of running operations for us, he also designs and builds some of our proprietary automation tools that allow us to, our pricing rules in Doc Engine allows us to underwrite loans, allows us to price loans, allows us to generate documents, and something that, as Brendan talks about with our TPOs, our third-party originators, our brokers, and our lenders that we actively support, gives them the tools to be self-sufficient too. So great job there in terms of what you do. Let's start off, let's dig in by really clarifying what is business purpose lending, this space we're in. How does a business purpose loan differ from another loan, that a loan you might get on an owner-occupied residence or something like that? Why don't you guys dig in? Mark, lead us off here. Tell us what you know about that.
Well, in general, just business purpose loans, like, we're a company that is asset driven and asset based, we're a lender based off the asset itself, right? So business purpose is, any loan that you're going to originate to an LLC or a business for investment purpose. Okay. And that's one thing that does make us a little bit different. We're not known as a non-QM lender. We're known, as an investment bank. I mean, we're hard money, and we're doing long-term financing because, we're lending to someone that, is going to do this for a profit. And that's how we underwrite. And we don't look at tax returns. We don't look at your bank statements and assets. It's nothing about that. It's really about the asset itself. How well does that loan perform? And we start getting into the trends of 2022. And we start talking about some of the loans that we've created. You can see that we've been very, cutting edge on the performance of assets, whether they be short-term rentals or long-term rentals. We want to concentrate on the business at hand, and that is the property. We're very, very good at understanding where the trends are going to lay and what the opportunities lay ahead of us in 2022.
Brendan, anything you'd like to add to that?
Yeah, absolutely. To expand on that a little bit, a big thing that we're looking at, and to kind of dive into a little deeper into what Mark is saying, is we're really looking for profitability in a lot of these, right? If you're buying a property, you're rehabbing it, and you're selling it, we want to make sure that you're profitable. And I think sometimes when you get into this space, you might think that, hey, these companies are trying to lend me high interest loans, situations where I might fail. And that's kind of the opposite of what actually makes sense, right? Not only do we want you to succeed, but the difference between us and perhaps a conventional lender is their client is somebody who's going to buy their house that they're going to live in for 30 years. Our client is somebody who's going to flip a house, be successful enough to do it again and again, and hopefully 5 to 10 times. And we want to be the lender on all 5 or 10 of those opportunities. And we do that by making a strong product, offering these businesses an opportunity to grow, so that they can, make enough money, invest it in themselves, and maybe they could hire additional people to do 2 projects at a time. So that's a big piece of our client base and what we're looking for.
Really good point, guys. So a business purpose lender is not someone that makes a loan for a house you're going to live in. It's a lender that caters to investors and developers. 2, we use a much different means of qualifying people. As Mark said, hey, we're not out there asking for your tax returns. We're looking at the project itself. Is it profitable? We want to be a partner for you to make sure you're succeeding, exactly what Brendan was saying. And we're qualifying you based on, is the project successful? And do you have the capability of doing this? And then in the case of rental properties, just what's the rental income on that property? And we'll go ahead and we'll dive into that more. So thank you guys for clarifying that. Let's kind of dive into what some of these different products are, and then we'll go into some of the real estate market trends. But what products are out there that Templeview offers that can help investors and developers? Brendan, why don't you start us off?
Yeah, absolutely. I think one of our most popular products is our residential transition loan, better known for everybody on the phone as a fix and flip, where you're the property, you're adding value to that property, and you're either going to sell it and make that profit and realize that profit, or you're going to turn that to a rental property. That fix and flip loan is a great opportunity to build wealth. And also, the goal of that fix and flip opportunity is to be able to get that property to an owner occupied state, right? You're buying a property that generally cannot get conventional financing. You're fixing that up, and our product is going to provide you the rehab funds to rehab that property into a space where that can now be purchased by an owner occupant. Because financing becomes available on that property, you're able to sell that, you're able to sell significantly more than you were previously. And that's kind of how you build wealth. As far as our fix and flip goes, we have a lot of cool advantages for our product. One of the biggest ones is return on investment. A big part of buying properties, rehabbing them and selling them is how much money are you going to make for every dollar you put into the property? One of the ways we help our investors by not coming out of pocket is high leverage points on the purchase. That might mean that you're only bringing 10% down or 20% down on your purchase. But we also, in addition to that, can lend out the payments. So this means post-close, you won't have any payments due during the term of your loan. And that term of the loan is typically a 12-month loan. Those payments are going to be paid for you automatically every month. If you sell that early, you get those refunded. If you refinance it into a rental product, those payments that you don't use, they get refunded. And that helps keep our products not only competitive, but make sure that you're not coming out of pocket and using all of your assets on a single property. This helps in multiple different areas, one of which is if something goes wrong. A lot of experienced investors will tell you something always goes wrong on their properties. I'm sure Mark can give us some examples. But something goes wrong and you may not have accounted for it in a rehab budget that you've provided to a lender. If something goes wrong, the lender is not going to be able to adjust how much rehab funds they've given you. In case, we have two different ways to combat that. One, you're not coming out of pocket as much with us, so you're going to have additional funds in your account. And two, we often add a contingency into your budget. This might be $5,000, right? And it's unaccounted for money. And if something's up, a problem arises. There's water damage where you weren't expecting it. You'll be able to take care of that, knowing soundly that your lender's got your back and they could cover that cost and refund you the money you're out.
Yeah, I just, I'll piggyback off of what you just said, and we're applying this to trends, right? So you understand that we have moratoriums in 2000 and 2021 on foreclosures. So you did not have access to bank-owned REO properties being listed. So as most people know on this, because we have, real smart people on here, they know that, thousands of properties just got transferred over to, some of these big box servicers that are going to be going through and pushing these things to foreclosure. So what that means is if you're not doing fix and flip loans right now, then you need to start listening to what we're saying, because we have a great fix and flip product. And this is going to be a great way to get business, because they're going to come. Right now there's no floor in the residential market. When you have listed properties, typically you have the REOs to give you the floor, and when you look at the floor, then you have the ability to appreciate. So why are we having this crazy inflection? These homes are in my market, you have a property listed for sale, you're getting multiple offers, and they're selling for more just because there's nothing else out there. There's a low inventory. And so when you see fix and flip hit the streets and have the ability to gobble these things up, because you're ultimately going to be renovating, and guess what? Your comp is the one that just sold for $15,000 or $20,000 or $50,000 over asking on 3 weeks ago. So those are the things that we're going to be looking at. And when we have these loans that put forth minimum investment, like one of the main reasons why people fail is the fact they don't have enough cash. They run out of money, and when they don't have money, they fail. So we've developed this fix and flip loan to keep the money in your bank account. We're going to be very transparent with the money you're going to need to close, and with our ability to offer the advanced draw feature and using the future value to include your payments. These are all to keep the money in your bank account, so you can do two things: have money when you need it, or scale. right? Like if you have money in the loan to cover that loan, you can then take your savings or other things that you have and actually do this again and buy another property. And that's kind of what we want to do here. And we, our fix and flip background is where we get. We started with the fix and flip product, but understand we want you to be successful. So we have checks and balances, and we'll probably talk about that later, Doug. I'll throw it back to you. Just some of the checks and balances we have. But I just wanted to kind of let you guys know one of the biggest trends you're going to see in 2022 is the rise of fix and flip because of the new inventory we're going to see in REOs.
Mark, I think that's a really, really good point, right? That during the COVID pandemic, due to federal law and oftentimes state laws, the ability to foreclose has been very limited. And those restrictions and those laws are being lifted, and it's bringing in a big inventory. What we're going to find out is, have borrowers just not been making their payments and they had the money, or can they really not make those payments? Virtually none of these people are underwater, so it's either going to result in foreclosures or a lot more people selling their homes simply because they have to exit and they can make money in the sale because they're not underwater. So I think we're going to see a lot more inventory. I agree with you. You each brought up some really interesting points I want to do a little bit deeper dive on. I'll circle back to you, Brendan. First, I want to talk to you a little bit about how you talked about no payments. That almost seems like something that's impossible. And then Mark, I'm going to circle back to you and talk about advanced draws, because that's also something I just don't hear a lot and something very unique to Templeview. Brendan, tell us a bit more. How can I get a fix and flip loan and not have any payments?
Yeah, absolutely. So fix and flip loans, you often look at them as two different loans combined into one. You have it's all one loan, but you have one for the purchase of the property, right? And maybe that's 90% of the purchase price. And then you have a second loan, and that loan is for your rehab, right? And maybe that rehab budget is $50,000 for you to renovate the property. Well, what we found is that, especially with properties increasing value, that there's a lot of equity available in the back end of the loan. So one of the things TVCs utilize is that rehab budget. We're able to wrap your repayments into the rehab portion of your loan. This means that it's not kind of the down payment, it's not coming out as cash due at close. It's wrapped into this back end structure of your loan, and it's coming out much like any rehab draws might during the process. And Mark could definitely, when he talks about advanced rehab draws, he could talk about our draw process, and that works out about getting your money. But yeah, the payments are wrapped into that loan, and a huge advantage. We're one of the only lenders in the space that are able to offer that type of product.
Yeah, that's amazing. And as long as you're after repaired value, the ARV, as we call it, what that home's worth when you're done, it's something we evaluate when we are underwriting the project. As Brendan and Mark have both said, we want to be your partner. We want you to be successful. As long as that exit is high enough, you can finance your payments right into the loan. You don't have any payments. You can focus on the project itself. It's a really outstanding program. It's incredibly unique with Templeview. It's really just not done out there in the industry. Mark, I'm going to circle back to you. You'd mentioned something called advanced draws. I'm only used to hearing about rehab draws when I look at some of the competitors. I know Templeview has advanced draws. Can you tell us what an advanced draw is and how that differs from a reimbursement draw and how that might help you?
Absolutely. Like when I flip houses, I've got a flip going on right now. It is a lifesaver, for cash flow. I mean, because again, when you close, the numbers of my flip are pretty easy. 330 purchase price. It is a renovation of about 115. ARV is about 625. When I close, I get my first draw immediately following closing. We get set up. We get a link sent to our email address. That link sets you up with an app on your phone. It's called OneSite, using some Langorilla software. And if I want to request a draw, all I do is click and they sent me a link for TruePick. And then what I do essentially is whatever I'm asking for the draw, on the second draw, I basically get the pictures of the roof demo, whatever I'm putting in the draw. I take the pictures with my phone and hit send. It goes off to our contract review company, our back end, and essentially they process those within 24 hours. So when you close on the loan, you get your initial draw, your first draw, usually 10% of your loan amount. I mean, not your loan amount, your rehab budget. Okay, once whatever was included in that draw request, and typically you're going to do soft costs, so plans, permits, architectural drawings, anything like that. If you have some demo in there, some trash out in there, that'll all be included in your first draw. Once those items are done and you submit those through, you basically get your second draw, because that's what an advanced draw feature is. You'd get 20% of that rehab draw schedule then sent to you for whatever you ask to put in there. That equals, let's call for the purposes of this example, $20,000. That was for, some demo, some framing, and some mechanical work. Again, I'm getting that sent before any work is being done, any hammers being swung. They're sending that into me, and everything's sent to the investor. The contractor isn't in play here because we're in business with the investor, right? One of the reasons why we do this, again, is the number one reason why we saw people fail was the fact that they ran out of money. So this is allowing them to have the money they need to, and guess who's super happy about these loans? The contractor, right? Because the contractor is getting a check, typically more than they're asking for, because the money's there. And when I give my contractor, if they ask for 10,000, I give them 15. Guess what? They are working faster than I've ever seen, right? Because they have the money in hand. They're paying their workers. They know that the other check is there coming. So, we send to see, market data that we've done research on, that our renovations on the advanced draw feature, because we do have reimbursement draw, but in general, our advanced draw are getting done about, Brendan, was it 60 to 90 days
About 2
before,
months.
about 2 months before the reimbursement draws that we see in our own data. And again, we want you to be successful. Anyone who's successful in a renovation or fix and flip loan is going to do another one. Anyone who fails and doesn't make money and doesn't do a good job, they're not going to do this again. Right. So we employ this product really to be, cutting edge technology, A, but B, put money in your pocket so you can do your loan and move on, sell it, move on, do another one. So that's kind of what we're doing. And we'll talk about why this is even better on some of our other, pretty cutting edge loans, such as, burring for rental and burring for short-term rental. So I'll throw it back to you, Doug.
Thank you, Mark. And I think I'm getting a consistent theme here. And I know it. And at Templeview, we want to cater to investors and developers. We are custom designed. We're one of you. We are investors and developers ourselves. And we want the project to be successful. So you can go do another one and another one and another one after that. And we have product features built in, such as advanced draws for well-qualified borrowers, such as the ability to finance the payments into the loan, to make that project successful. You got to really listen to what Mark said there of, right now it's a tight environment. Everything's in short supply. That's everything from employees to supplies. And that's true on a construction project too. It's hard to get employees, it's hard to get supplies. You've got money there, and listen to what Mark says. He's an investor. He's doing these projects, saying, look, I come in there and I've got money through the advanced draw feature. I'm number one on that contractor's chart. I'm the one that's getting the attention. And that's a key thing right now. Let's talk, we're sticking here with our residential transition loans, our fix and flip loans. Tell me a little bit about the kind of leverage you can get on these loans. What are some of the terms that a borrower can get on these? Mark, why don't you start off? We'll start with you.
Well, I mean, leverage on this is, 90% of purchase price, 100% of renovation costs, and go up to 90% loan to cost, and we do include your escrow for payments in the LTC. So it is, the way we calculate LTC is not a normal way. So it's shaved and created for the benefit of the borrower, for sure. We also get creative, like we allow for 6% seller concessions. So, if you're getting a good deal, you can have, the seller go up 6% and then give it right back to you in seller help, because you can do that to cover your closing costs. We're very upfront about structuring. We want you to kind of, use if you got something under contract on a good deal, if you went back and you renegotiate, whatever it is, use it to your advantage. But yeah, leverage is, we want to go up to 90. If you're new, if you're just getting in, we'll still finance you, but you're going to put an extra 10% down. You're going to put 20% down, which is very standard across the board. Also, it's going to give you better, if you have the 20% to put down, you're going to be covered, for mishaps or mistakes. You have more skin in the game, but you also have more equity in the deal. So.
Mm-hmm. Absolutely. Brendan, can you give us a little bit more detail on that loan to cost? You're the operations guru here. You understand the way we underwrite these loans.
He's the math guy.
Yeah, he did. He said that, right? He's a mathematics guy, and I know that from working with him. He's a math whiz. But tell us a little bit more about loan to cost and about how that is a real advantage of working with Templeview.
Yeah, well, I'd say first and foremost, TVC is very, very good at advancing very large rehab projects. You know, when we're out there talking, if we see a budget that's over 100,000, that'd be, you know, a deal that we really want to do. We not only because of the different servicing options that Mark has, you know, spoken about. He's his own inspector, right? He's inspecting his property with his cell phone. That's incredible. Getting those advanced rehab draws, not having to make payments. The loan to cost is a limiting factor when you get into large rehab loans. Essentially, it's exactly what it sounds, right? It's a formula with your total loan amount divided by your total cost. Now, a lot of lenders in this space are looking at cost in different ways than we are. The loan amount's not going to change, right? The loan amount is the loan amount. However, cost could just mean your down payment. It might mean your down payment plus any unfinanced rehab that you're coming out of pocket. It might mean the points that you're paying on your loan. It might also mean the payments that you're making, right? Most lenders are a little bit more conservative on loan to cost, and on larger rehabs, cost is going to be your limiting factor. So if you find a large rehab loan, you might find that 90% loan to cost isn't quite sufficient. Maybe you're at 92, 93%, and that lender won't close that loan. With us, we understand that you actually have multiple costs on your loan, whether those are origination fees, title costs, taxes, payments, which is the largest one, right? Not only are we lending you 12 months of payments, but we're putting those 12 months of payments in the denominator in that loan to cost. That's a cost out of your pocket. That's how we consider it. And because of that, our loan to cost formula, where, you know, some of our competitors might consider something 95% loan to cost, we're closer to 90. And this really gives you a huge advantage when you see those large rehab projects where somebody's doing you know, maybe they're adding some square footage or they're doing a larger renovation project. We are going to excel on those transactions, not only because we have you know, in my opinion, an amazing rehab department that is very good at vetting these transactions, but because we're going to be capable of giving you more money, right? Giving you that better return on investment so that you can scale projects, do more at once, or simply more money per dollar you're putting in.
It's really unique here. So to put a big bow on this, what I'm hearing is the industry standard on loan to cost is I'm just going to include your project costs in, and that's going to be divided by your loan amount. It's limited to 90% or sometimes less. But at Templeview, we're not just putting in your project costs. We're putting in your costs of closing the loan. We're putting in your costs of the payments, and we're doing 90% of that. So it's really a huge advantage here to be working with Templeview and our loan to cost calculation. It's really unique, and it really favors the borrower and favors that project being successful. So that's an important thing to know. Not all lenders are created equal. In this case, Templeview really has a huge strategic advantage of how we're doing this, and the benefit is to the borrower themselves of how they do it. I want to circle back a little bit on the technology and that TruePick. Mark, you mentioned TruePick. What is TruePick and how does it help?
So the TruePick service is it's related to rehab draws. And again, it's something that we could send to your phone. So we send it to your phone. It's an app you download, and that allows you to be your own inspector on a property, right? You're at your house. It's going to give you instructions on what pictures to take. And again, you already have a roadmap for the rehab that you'll be completing, whether that's doing windows and doors or whatever those first items are. We're going to ask to see those items. The great thing about it is, you know, maybe you show us a picture. We want a little bit more information about it. We could say, hey, why don't you take a video, walk into the room, and us all four corners of the room, and send that in to us. Because you're doing this yourself, you're not waiting for an inspector to come out to your property. You're actually saving yourself a time. And that actually saves us a lot of time, right? We could be really exact what we want to see so that we can refund or advance your money to the next draw as quickly as possible. And from Mark's experience, I'm sure he could tell you that, you know, same day draw disbursements, they happen.
Oh yeah, very, very good. Yeah, I mean, the technology is great. And you know, moving in 2022, it's only gonna get better. Technology is gonna change. I think we're looking at different software too, just to kind of, go off of what we already have. I mean, we're about 24 hours to request, to get money in your account, but I mean, it could be even quicker if we can get better technology. So, that's one of the things that we're always striving at. We know that, cash is king in this space. So getting you the money to do your deal is what we're all about. So.
Cash is king. You gave us that example, Mark, where you were saying, hey, you can get more resources on your project by having that cash up front with advanced draws, but also time is money. And in a traditional draw process, an inspector is going to be called out. The inspectors are going to go out there, going to look. It's going to be measured in days, not hours. So to have same day reimbursement is really revolutionary. I think also it really tugs at the core of Templeview. The mortgage business hasn't always embraced technology. When we have a problem, we traditionally throw people out. Let's just throw people at it. And the problem with throwing people at it is people can be expensive. They don't work 24/7, 365. And they oftentimes require raises, sick time, et cetera. Technology doesn't require any of that. So at Templeview, you can see how we're incorporating technology into our process and how this benefits you by having things move quicker. Technology works 24/7. And with that true pick technology, you know exactly where you are. That's something that's just really on the cutting edge. It's great.
Oh, yeah.
Anything else we want to talk about in terms of residential transition loans, just the fix and flip, and then we'll kind of delve into bridge and to ground up. But anything else we want to add right now on residential transition before we move on to a different product?
I think we're good now.
I think we covered.
All right, we're all good. So let's move into what's the difference, Mark? What's the difference between a bridge loan and a residential transition loan?
Again, a bridge loan is going to put money in your pocket. One of the trends that we're seeing is that your house is listed for sale, but you have to be competitive in the market and have cash, right? So if you're going to get a couple $100,000 from a house, we can close a bridge loan pretty quickly to put money in your pocket to get something else under contract or close something else that you need to. So I think bridge loans in itself, Doug, are it's pretty standard what they are. I mean, there's nothing really different about how we do a bridge loan versus the next person. I think, with purposes of about 10 minutes left in this call, we should get into some of these trends that we're seeing with, short-term rental and some of these other things. What do you think?
It's a gentle little nudge. I love it. And I do think something's different about our bridge loans that are LTVs. Real quick, Brendan, you got a minute or less to tell me about Ground Up, because that's another product I know Templeview offers.
Yeah, ground up construction. So our ground up construction product, we can also lend payments within the ground up construction product. So you get the same bets there. We currently only go off of reimbursement draws for ground up construction. Ground up construction applies the same loan to cost formula. And if I'm saying that a fixed loan at $100,000 is a large rehab, ground up construction tend to be much larger. You're typically buying a lot of land, and that lot of land is not worth as much as the rehab budget you're going to be putting in. And I would say that 99% of lenders are going to be limited in being their loan by the loan to cost. So having a more generous loan to cost formula is really going to put more in your pocket.
And again, what's the trend? Trend is inventory is way down. So what are people doing right now? They're building to rent, right? So they're buying lots, they're chopping them up, and they're creating their own rent portfolio. And some are doing spec home builds, absolutely. Just because, again, the inventory is down. I mean, you can build a custom built home and still make several $100,000 in my market. So it is absolutely something to take advantage of, to your point, Doug.
Yeah, absolutely. But like you said, it's primarily being driven off the tight inventory. Mark, it's a good transition. You'd mentioned that BRRRR strategy. I know you've utilized this. Tell us what BRRRR is and tell us how that applies to long-term loans. I know that it wasn't that long ago, a couple of years ago, if I want to get a long-term loan on my rental property, my options were to get a 5-year loan. It just wasn't available. So tell us about BRRRR and what kind of long-term financing is available for rental properties, please.
Absolutely. And again, this isn't my, I didn't come up with the BRRRR strategy. It was bigger pockets, buy, you're going to renovate, you're going to rent, you're going to refi out all your money, and you're going to repeat. And then some people say BRRRRs with an S at the end. That means scale, right? You're going to scale this out. So, everything that I can tell you, it's all about creating equity. All right. And then finding a company that realizes that's exactly what you're doing. So you can actually pull out any hard costs. And that's what we've created. So, with a transition loan, renovation loan, that we're going to give you 90%, acquisition on the purchase and 100% on the refi. But if you're refinancing that for a rental, okay, we're going to let you use that equity you created by your blood, sweat, and tears in the renovation. So we're going to give you 80% of that new appraised value back out. And hopefully within that 80%, that's going to give you your money back, or some of it, maybe not all of it, but it's going to give you a good chunk of your money back. So then you're going to have a cash flowing, performing asset. And again, you're going to be, at a low fixed rate there. So we have that, the transitional like acquisition loan, and then your long-term 30-year fixed, or long-term 30-year fixed interest only, however you want to structure that. But we have that loan to be able to initiate, an 80% cash back, or we call it a refund, which is a very, very cutting edge loan. It doesn't really exist out there in the marketplace. I do like to say it absolutely works, but remember, you can only do this within 1 year. Okay. It's a refund, not cash out, because, you're doing it within 1 year. You're proving renovations and you're showing costs that you brought to closing. And then we're going to give you up to 80% of that back out, which is a really good opportunity when you create equity and value. We're also allowing it for short-term rental. So, when you're buying something that is a foreclosure, happens to be in a very good market, maybe vacation area, you can still get it at a very cheap rate. And then we're going to qualify you, maybe these loan amounts. And the reason why we've come out with a short-term rental loan is because of the loan amount. Your normal debt service coverage ratio may not cover it on a long-term 30-year, rent schedule. And so we'll let you use what the short-term rent schedule would be to qualify that loan. And these loan amounts can be, up to, I think we're capped at $2 billion. Quote me on that, Brendan, capped at $2 million, but these are still really big loan amounts for these mountain houses, ski resort places, big shore houses and things like that. So I see Anthony pop back on there.
Well, we're still dominating a little bit of time here because this is such an important topic here. And I just want to put a big exclamation point on this. So, Mark, what you're telling us is at Templeview Capital, I can put a long-term loan, and long-term loans are 30-year loans. It can be a 30-year fix. It can be a 10-1 ARM. They can be interest only for the first 10 years. If it's interest only, we'll qualify in the interest only portion of the mortgage payment. But let me get this straight. I can put a 30-year loan on a short-term rental, an Airbnb, a VRBO, things of that nature. Brendan, can you kind of build on that? I didn't think that kind of financing is available out there, and it is available at Templeview. Tell me how this really has changed the game.
Yeah, it's just following along market trends. The most profitable properties that we're seeing right now are these short-term rentals. Short-term rentals are defined as daily, weekly, or monthly rental types. That's to your long-term lease, which is an annual lease. They're massively profitable. And you could go in areas where, it would be much more difficult to find financing previously, such as vacation markets. A lot of lenders are very wary of you buying a vacation home with an investment purpose loan. However, in these vacation markets, for example, you could get a beachfront property qualified off of a theoretical short-term rental income and purchase or even refinance that property into this short-term rental product. It's one of our most popular products right now, and it's actually massively successful. The monthly payment for these are sometimes less than half of the monthly income on them. So it's a great opportunity to get into space.
And I'll just co-sign. I was just down at the Eastern Shore. I do a lot of investing in Ocean City, Maryland, and it was funny. I put an offer in. It's beachfront. It's $400,000 purchase price. You can walk to the beach. We pull a rent comp through a website called airdna.co. And Brendan, why don't you type that into the chat so they can take a look at that? But airdna.co, and really that's where we get the rent comp, and that's how we qualify. It's that simple. We can actually do the qualification on this loan from the initial phone call that we receive. If it's a TPO client, we'll pull it for you. You just give us the address and how it performs. And we'll do that calculation for you, give you what that actual rent schedule is. And I'll leave a kind of a funny story, and then we'll turn it back to Anthony. But like, I called a local. I was driving down Coastal Highway. There was a mortgage lender, sign on the side of the road. I figured, let me call them and see, how I would get qualified. I mean, I'm an investor. I've got several loans. Let's see what he says.
Market research there.
did a little market research, but I also, I'm thinking about this is does he have a loan that's competitive like mine? And I went over and I said, look, I've got 9 properties down here at the shore. I've got several on Western Maryland in a place called Deep Creek. He goes, well, you have over 10 properties? I go, yeah, I got over 10. He goes, well, I can't help you. And that's kind of where we stopped. I mean, it didn't even, they weren't on my personal name. They weren't even, they wouldn't even know about them unless, they're going to show up on my tax returns. And so even, the fact that I have multiple properties, we had to stop the conversation right there. He had nothing for me. So, we have stuff that's made for investors. When you have multiple properties and you have investor clients, or you are an investor, it is real. When you get to 10 properties, you're done. You got to have stuff out there. So we want to partner with those people. It's actually better for us. Some of these companies, the more properties that you have, the harder the underwrite, right? They ask for all the payments, all the escrows, proof of payments, all this stuff. More reserves for the more properties that you have. That is actually completely opposite the way we do it, right? We want to say, okay, you have 15 properties. That's good. We know you're good. We know you're an investor. We're going to lend you more money, essentially, more leverage. So, I see some questions. So Anthony, I'll let you start.
And I just want to put a big bow on this here. And what Mark's talking about, 10 properties, a lot of people will cut you off at 5 properties, but for us, we cater to investors. That's a plus for us. That's a positive. And just real quick, if I'm looking to finance a short-term rental and a purchase, Brendan, what kind of leverage can I get? How much of a loan can I get? I didn't even know I can get a loan on a short-term rental.
Yeah, absolutely. So in 3 states right now, Florida, Texas, and California, we're willing to do a 15% down. Into the country, we're doing 20% down on short-term rental purchases.
Wow. So outstanding. And as Mark pointed out, the cash flow on these is just incredible. We're really seeing a strong appetite by the end user, the person that wants to rent that short-term rental. They're willing to pay a lot. So just a truly industry-leading way of doing this. Not many people financing short-term rentals, and the people who do normally underwrite them as long-term rentals. As Mark pointed out, we're using a third-party software, AirDNA, that gives us an accurate rental income on that property as a short-term rental, and that's how we underwrite it. So really great stuff there. And if you have that situation where you're looking to finance a short-term rental, please reach out to Templeview. With that, Anthony, I'll hand it over to you to wind us down here. Anthony, you're muted, but please continue.
Thanks, guys. Okay, we have questions. Guys, well done. Great. I'm ready to jump in and work with you guys. So it's exciting to hear this. We got some questions. Let's go to Q&A first. We do have some in chat and we do have in Q&A. Nellie D. Cruz, do you have a list of contractors or requirements for contractor?
Brendan, why don't you take that one?
Yeah, absolutely. So we ask that our borrowers have general contractors lined up. We don't provide the general contractors. In fact, we don't provide any third-party references, whether it's insurance or title. But for general contractors, we like to see that you're vetting, you're actually getting a contractor license, insurance, and we like to see the last 2 projects they've completed. This gets us comfortable that we have somebody on the project that has the experience necessary to complete it. And it also helps to have somebody, upfront. It's a very competitive market right now to find a general contractor to complete your work. And if you do have to pull permits, we want to make sure that you have that data upfront so you're able to do it.
So we're not going to supply your contractor, but we're going to help you vet that contractor to make sure you're working with a good operator. One more way Templeview is your partner to success.
Thank you, Brandon. Anonymous attendee. Hi there. A template that we could fill out to apply for a flip and a fix loan for experienced flippers to show portfolio. Is there a template?
Mark, why don't you handle that one, please?
Well, I mean, we have an application. I mean, we have I mean, we definitely have something that we can send out for them to fill out. And just to your point, if you have someone that, fills out the application and they get vetted with us, so let's say it's Main Street LLC, we approve the LLC and that borrower. So that, that once they do one loan with us, they're set. They've already been approved. Documents get renewed or checked every 90 days. So, once they're approved, they're kind of streamlined through the process.
That's great.
Just really clarifying that, look, there's a lot of ways you can get a hold of us. You can fill out there's some online forms and online application we have. There's a chat that you can reach out to us. Every project is a little different though. And we want to hear about it. We want to be your partner in this. So ideally we want to talk to you. If you don't want to talk by phone, that's fine. We can talk by email. We can talk electronically. We can text. But we do want to get specifics on your projects. We aren't a cookie cutter lender where everyone's the same. Every project's different. Every borrower's different. And we want to be your partner for success.
Great. That's good. And of course, I did put up the emails above there, and you guys could reach out to them even right after this webinar. And I'm sure they're going to send you instructions on everything that they have and all the products that they have as well. Philip Seeley, as a TPO broker for TVC, I would like to review the guidelines for a fix-a-flip product. Where can I view them?
Brendan, this is right up your alley, buddy. Did you rig this? Did you ask that question? If it was anonymous, I would have accused you of asking.
I logged in, huh? No, so when you get as a third-party originator, we will provide you access to our portal, the way that you would register and submit loans to TVC. And on that portal, you have all of our specific product guidelines. We offer all of our sheets, and we offer, beyond products guidelines, vendor information. Hey, if you want to order appraisal, where can you go to order it? What kind of credit reports and et cetera.
Great. Thank you, Brendan.
Knowledge is power. We provide our broker partners with a lot of tools, high powered tools. Brendan is quite frankly the manufacturer of a lot of those tools that are industry leading. So we want to give you the tools success. We want to train you how to use them, and coming to our website and either calling us or filling out a contact us page is the best way to get that information and start that. And I just want to point out for the TPO partners, we do offer table funding also. The brokers and will understand that.
Good. Thank you, guys. Philip, again, do you also have a best practice guide for originating the loan? Best practice for the borrower?
I'll try to take that, and it goes back to the theme of this entire discussion, which is TempleView is your partner. So we provide you these tools I'm talking about. They tell you all about originating the loan, how to do it. We are your partner there. When we're working with brokers and lenders, it's the same as when we work with borrowers. We don't want to just do one loan. We want to do a whole lot of loans with you. We want you to be successful. We want to create a win-win situation. There's two ways to make money in the mortgage business. I'm going to do a small amount of loans. I'm going to charge you a whole lot of money on each loan. I'm going to do a whole lot of loans and charge you a little bit on each loan. And that's how I'm going to do it. We're the latter. We are a volume shop. We want people that can do a high volume. And that's exactly what we do to support you. So we absolutely can support you in the entire origination process and provide you those tools that you need to do that.
Thank you, Doug. Philip, again, what is the turn time on
Philip's
bridge loan?
dominating this webinar.
Yes, he is. What is the turn time on the bridge loan? And what is the max loan amount on bridge?
Brendan, I'll lob that over to you. Kind of an ops question there.
Yeah, $2 million, or geez, bridge loans are $4 million actually.
Mm-hmm.
As far as turn time goes, it's I always say it's dependent on who's delivering the loan to us. So typically we do appraisals, so you'd get an appraisal back. I would say typically within a week from delivery of appraisal, you should be able to close that loan.
And I can really expand on that, right? If from a sales standpoint, we would say, hey, it's a week. And if Brendan was speaking totally open, he'd say, Doug, if you could just get your clients to give me a good package, I could do it in a couple of days. So it's all about the quality of what you put in and giving you the tools to do that and the knowledge to know what you have up front. So you're not hearing about something at the very end. You know about that up front. You could be prepared and set the right timeline. In addition to that, we want to be very communicative. There's nothing worse when you are a broker or lender working with someone to not hear back. We can't always tell you exactly what you want to hear, but we update you on a very regular basis, as well as provide you automated tools so you can go online and look at your entire pipeline and see the status of that at any given time.
Yeah, and just to finish the point there, I mean, if you're on our TPO platform and you deliver a loan, we have counterparties closing loans in 3 days. So, I mean, when they're submitting it in, they have a full package. When they have the experience working with us, they know exactly what we're looking. We're very consistent with our underwrite, so we can set those expectations. So, like I said, it just really depends on the package itself. Appraisal is key, especially if you're doing a higher dollar loan amount. Remember, I mean, if you already have something in his hand that we can look at valuation wise, we'll put that through our internal staff and team and take a look at it right away.
Thanks, guys. Philip, is there a co-branded marketing material for the ground up product? What is the turn time?
Mark, I'll let you handle that, buddy. On behalf of marketing, you better crush this one. Come on, they're going to be upset if you don't crush this one.
No, we've got full white labeled document, marketing flyers and everything. Yeah. So we don't have to co-market anything, in fact, we want you to be the face, we want to be your backbone. We want you to be the face. You go out with our products. In fact, I have a lot of my TPOs that took our Airbnb flyer and sent it out on social media and Facebook. And they got, 40, 50, leads just from talking about the short-term rental product that we have. It's really cutting edge. Not a whole lot of people are doing it or doing it our way. I see somebody in the chat saying website for rental comp. Yeah, that's exactly what we're offering. Yeah, we pull a rental comp from a website, and then that's what we use. It's pretty awesome.
Okay, that's good. Anonymous attendee, does Templeview only cater to established larger institute level investors or also to smaller first-time investors who are looking to get into the real estate investing, negotiating, flipping business?
Brendan Boyle, this one's yours, mate.
So it depends. I would say if you're not a homeowner and you've never flipped before, that wouldn't be a client for TVC. These are non-occupied loans that we are writing. And in those situations, if you don't own your primary and you're renting, when you buy another home with a loan, it could be possible that you're going to be living there. So we shy away from those types of opportunities. But if you do own your own home, we typically look for 12 of history of owning your own home. We'd be happy to write you a loan and vet you out.
So in summary, if you're a first-time home buyer, we're not your lender. If you have a 12-month mortgage payment history, we can make you an offer.
Yeah, and we get that all the time for the first time home person, the first, the new flipper. But for the mortgage professionals on this call, you guys know this. Talk about a house hack. They should buy their first house, $203K. They don't have a mortgage, so they can get involved with a real conventional type of loan anyway with lower leverage. I mean, we're 10, and that person would have to put down 10%. 20%. Whereas, first-time home buyer puts down 3 to 5%. So, as the professional, we like to give that advice to brokers or people that call in, just because, again, that's the way you do it when you're starting out as an investor.
One thing I'd toss in there too, because we do want you to be successful. And there's a little joke in our space that, contrary to popular belief, when you buy a property and flip it, 2 good-looking guys don't show up, and in 30 minutes it's done, despite the cracked foundation that you didn't know about up front. The reality is it takes a long time. You need to know about that cracked foundation up front, and you need to make sure your budget's right. So for any first timer out there that's contemplating this, the best advice I can give you, partner with someone and get a PhD in flipping. Just partner up and split the profits and learn what's going on. You heard Mark talk about meetup groups that he runs in his area. Be very wary of starting a project. The shows on TV are really, really fun, and we like watching them too. But like everything you see on TV, they're really not based in fact at all. And it's much more challenging. You've got to make sure the project stays on time and on pace. The worst thing that happens is a project draws out. Time is money. You want to get the project done. You want to sell it or turn it into rental, whatever your exit is. You don't want that project dragging on. And with first timers, especially if you have another job, your primary job, one of the other best things you do to ensure project success, show up every day, and you can't do it. So be very wary of just starting something your own based on a TV show. And instead, join one of your local meetups, meet some people, and partner with someone on the first couple you're doing.
Very good. Very smart. Michael Abaz, how do you think the Fed raising interest rates will affect the real estate market? What if we end up in the same double-digit interest rate market as what happened in the 80s and the sellers can't get a loan to buy a house? Are you rehabbing or are you building new?
I'll take a little bit of a swing of that, and then you guys can jump in, simply because I was alive in the 80s, being with my history here. And let me tell you from being there firsthand, people did buy houses. That's actually incorrect. Home sales did go on, and interest rates were high, very high, especially by today's standards. But housing is like tires on your car. Good times or bad time, you need tires in your car if they're worn out. Housing, you need that. You can't, if right now you're living at home with your parents, you're eventually going to need to move out. If your family's growing, you are going to need a bigger house. So you're always going to need housing, and rates are going to impact the amount you can borrow because it's going to constrain your buying power. When rates go up, your payments are higher, it constrains your buying power a little bit. When rates go down, it strengthens your buying power. But I think the next cycle, as rates go up, means that there's not quite as much red hot demand for housing. Some people will bail out. Will actually open up the market for flippers and developers and people buying fix and flip projects. So we're very, very bullish on the next phase. And we think it forebodes a really, really good market for fix and flip.
And Doug, just to piggyback on what you said, our rates on the short-term fix and flip loans didn't do anything recently. And in fact, they're very, very strong. Lowest in the industry, one could say, depending on where you're getting your money. So, obviously the secondary market for the long-term 30-year fixed loans is a different story. However, we're still very, very competitive. I think we have a floor rate still in the high threes. I mean, we're one of the only companies that can say that. So understand that, like, if rates go up, I mean, you're still going to, like what Doug said, people are going to buy houses. We are still hands down dealing with a shortage of housing. So no matter what anyone on this call says, I mean, the trend of 2022 is we're still going to have a very strong housing market. And the one thing that I am doing, right, is I'm buying a little bit smarter. So if I'm buying something with a heavy renovation in the next couple of months that might be, being done and sold early 2023, I'm projecting that into my model, right? Because when housing starts, building starts, catch up to where inventory is, and you've got more inventory and you've got your REOs coming on and they're being flipped over, right? You're going to have a change, and I will call it a market correction. It's not going to be a crash at all. It's going to be a correction. You're not going to see this. You're going to see this, and you're going to see, the loans that we are providing for investors are not based off of appreciation. Okay, they're based off of how well that that house performs, what the rent income is. Anytime you have an inflationary, like a problem with housing, it's harder to get loans. You can't get your hands on a loan. Interest rates go up. Guess what happens? So do rents. So our loans are going to be stabilized in the future based on rents being able to go up and your payment staying the same because we put you into a 30-year fixed. So understand, vacancy levels are even lower than the housing market inventory. You put a house on, you look right now, all you real estate agents know this. When you look for rentals on the MLS right now, you do not see anything in green. You'll see 4 or 5 things in green in a whole 5-mile radius. There's nothing there. So rentals are at all-time lows. And anything that happens in this real estate market, why do you think I've transferred a lot of my flipping business into buying short-term rentals and fixed and long-term rentals? Because when anything happens, they're still going to perform, and they're going to perform well.
Brendan, anything you want to add on that, the rates and the market and what your kind of your forecast, what's going to happen?
No, Mark covered it. I agree with Mark. And to talk a little bit about when you're a loan, even if it's a fix and flip loan, you're not looking at what this comp might be worth 13 months now. You're looking at what it could be worth today, right? So that you're kind of accounting for, in the last 12 months, it's been great because market's been increasing like crazy, right? So that ARV and our clients are making more of those transactions. But yeah, if that stabilizes, we're still going to be, writing the right amount of those products.
The real estate market is like any other market. Good times or bad, sharp operators can make money.
Very true. Very true. We're back with Philip. Will you accept foreign national for any products?
Currently, Templeview is not lending to foreign nationals. That's a segment that's more handled by the non-QM market itself. So again, we're really going after people that are based in the US. We'll do loans for permanent residents, aliens. People with a green card will do that. But if you're a true foreign national, we will not make that loan.
Okay. Michael Nicholas, how do you handle builder who's buying multiple lots for ground up construction, say 9 lots, say 9 separate loans, maximum exposure to guarantor and investor?
Brendan, you want to take that one?
Yeah, so we would write 9 separate loans for that transaction. Typically, if you're buying the lots, in most cases, you're going to buy the lots. You're going to develop, right? Get your plans, your permits there, sub utilities. You're going to get that ready, and then you'll be refinancing into those 9 loans in most cases. Far as concentration limits, the hard numbers are 20 units for 20 million, or for 10 million. I'm sorry. So as long as your experience and your credit, you back up the claim that you can develop nine lots at a time, we'll be able to do all 9.
Right. And a lot of that has to do with the project itself. Are all 9 lots coming, the projects in at the same time? You're going to be competing against yourself. We just want to make sure that the assumptions on that exit value, that as completed value is accurate, because you're competing against yourself. When someone goes and says, I want to buy in this street, there's 9 homes available, this is going to be great. They're all the same seller.
Very good. Thank you, guys. Michael Nicholas again. Also, how do you handle if they are buying at auction, need speed?
Mark, you want to take that one?
Yeah, sure. So if you can get access to the property, like I've bought from auctions and used Templeview, depends on what part of the country you're buying in. So in Maryland, where I've bought at foreclosure auctions, I do have time to close, and plus I have to wait for the loan to ratify and the deed to record before I can even buy it. So, if I get access to the inside, there's no problem, right? Because we can get that valuation we need. If you do not have the ability to get inside, sometimes you don't, and you can get a, you can remember, we don't source our season funds to close. If you can get cash to close that thing, we do have up to 90 days a delayed purchase. So we're going to give you delayed purchase terms on that house up to 90 days. So again, if you're using cash, if you're doing a line of credit that you got to repay back, I'm doing one right now. I'm pulling a quick 60-day bridge out of my investment, SEP IRA, and I got to return it in 60 days. So, again, I'm doing that to get something that, basically, so I don't have to, do a bridge loan. I can just use my own cash because we have a product that suits that need.
And then once you have the time, like within that 90 days, then you do delayed purchase. So great example of transitionary financing there that Mark's using to acquire properties.
Yeah, but again, to the point of the person who asked the question, if you do need something to close within 5 days, we're just not going to give you the money because we wouldn't be able to do an underwrite. So I would always say, for acquisition purposes, have that local guy, someone that can have access to cash if you need it. But we will be able to take that and then turn it into that renovation loan within 90 days and return all the capital you put out.
Thank you, Mark. Philip, again, Seeley. For cash buyers who finance the initial purchase, can you do a cash out refi or a Dscr?
Brendan, this one's you, buddy.
Yeah, we could do both. So if it's a flip loan, it's called the delayed purchase. This is the terminology we give it. A delayed purchase matches your purchase financing terms. So if you were eligible for a 90% LTV purchase, we will actually give you a 90% cash out. Again, that's within days of your original purchase. That's true also for rental finance. You qualify for 80 or 85% LTV purchases and you get all cash, or even if you get transactional financing like Mark was talking about to get you over that purchase, we can do a delayed purchase and match those same terms and give you that 80 or 85% cash out.
Good. Thank you, Brendan.
Yep.
Nellie D. Cruz said, thank you, guys.
Thanks.
You're welcome.
Appreciate the shout out.
I'm sorry if I'm going to get your name wrong, but Uzum Gassi. Does TVC have required appraisal management companies?
Mark, this is you, bud.
Yes, we do have AMCs that we deal with in the next, well, I guess we don't have a time, but Q1 is what I was told. We're taking a lot of our appraisals in-house. So that's another trend for 2022, guys, is, the appraisal's been the bane of everyone's existence in this space. We needed to securitize loans on the secondary market. However, we've come up with a lot of research. We put a lot of efforts into putting this in-house, and so we're very close to being able to release this for all residential loans. And this we're pretty excited about. But as it stands right now, for the next foreseeable future, next couple of weeks, we do have approved AMCs that are being used.
Great response, Mark. And again, just a reiteration of how TempleView is being very innovative on the front edge of coming up with solutions that benefit borrowers with that appraisal valuation solution that Mark gave you a little tidbit on.
That's very good. Thank you, Mark. Uzum, again, Garci, is there a minimum number of loans a TPO broker needs to originate?
Brandon, this is perfect for you, bud.
Yeah, absolutely. So the third-party origination channel is about empowering a third-party lender originator to deliver volume loans. And because of that, we were really counting on your staff to be a process and put those loans together and deliver us a package that we can underwrite. And that is, we are an underwriting shop. And we lose money if you guys aren't at least getting $1 million a month. And that's like that's the minimum. So if you can't originate $1 million a month, that channel, you're probably best served with an officer and a TVC provided processor to help you through those collecting docs and getting those loans done. But if you can take that responsibility on and we can pay you additional funds to close those in your name. Again, we're looking for, that's the minimum, preferably $3 to $5 million a month.
And again, let me just highlight for everyone on the line. Okay, so if you're trying to sign up as a TPO, you guys don't know this, but we don't keep any of your points, right? These are all your points and these are yours to keep. You're getting paid a whole heck of a lot more money than on our broker channel. So that's where there is that rub where we want to partner with you, put in our resources to help you guys and partner with you. But that's why we have this requirement of $1 million. We do have a process on the front side that kind of does an interview and talks to you and looks at your previous loan histories just to make sure you have the potential to get there. But if you're starting out and you're new and you're doing a really good job, partnering with me or somebody on the broker channel and creating that relationship by doing some of our loans now, you can absolutely do that. And you can just start tomorrow and you can open up an LLC and you can just actually start originating our loans on the broker channel. You can do that right away. And then you get access to, our top in-house processors. You're basically originating it, you're sending it in, and then you're kind of seeing our process. If we need docs, we'll ask you, but a lot of that is on us to do. And of course, we're going to split the upside on that. And that's just, until you learn that process and then you get it down and then we want you to grow. We want you to do 5, 6, 7 loans on the broker channel. And then we want to say, hey, you know what? You're going to be perfect for our TPO platform because you're already doing it. So that's kind of what I would answer that question. If you're new, you're going to start on the broker, and then once you're seasoned or you are seasoned now, we can get you right up to the interview for TPO.
Well
Thank
said.
you, Mark. Yeah, thank you. Yep, well said. Philip is back again here. Can you address the appraisal process, and will you accept an appraisal from another lender?
Brandon,
Yeah.
that's very ops related. We'll let you take this.
Yeah, so the appraisal process is, as long as you have the documentation toward appraisal, we want to order the appraisal as soon as possible. So if that's, if you're doing a fix and flip loan, we want to see your rehab budget and we'd like to see the purchase contract. Both of those are going to be required for the appraisal order. And what was the second part of that question?
Would we accept an appraisal from a different lender?
Yeah, so we can accept an appraisal from a different lender. We do need a release letter from that lender. We do provide a form that the other lender fill out stating that they are releasing that appraisal to the borrower and that they are what's called error compliant, which means that they're not communicating directly with an appraiser influence values. So if they could sign off on that and show us that policy internally, we can accept that appraisal.
Okay, thank you, Brendan. Tim Burrell, in order to qualify for a ground up loan, do I need to have a recently built ground up, or can I use a fix and flip I have done to qualify to get a ground up loan?
Yeah, I'll take this one because we get this a lot. And Tim, listen, it all depends on the experience. Ground up typically, and any of the big companies that are doing ground up, they want to see 5 experiences, 3 experiences, things like that. Our guideline says 2 ground up experiences, but a total of 5 experiences. And if you don't have any and you've done renovations on property heavy renovations, call it $100,000, $150,000, we'll still consider you for the ground up product as long as you have over 5 that you've completed, and we can underwrite those deals, and you're actually in your same space. So you might be in New Jersey and you're flipping, but there's not a whole lot of inventory REOs in Jersey, so you might try to venture into that. As long as you have the right people that you're working with, and again, these are things that we'll consider, but the guideline that we have is 2 ground up, and then at least 3 additional heavy renos.
Ground up is, go ahead, Brendan.
I'd like to comment on this a little bit too. So this is the market trends and something that we've been seeing. So fix and flip with inventory being low, a lot of people that were very successful fix and flips, they were moving to ground up construction, right? And ground up construction might have been a new product for them. So to actually comment on that experience, we accept fix and flip experience towards our ground up construction project, but we do require at least one to be what marked a heavy renovation. That's at least $100,000 of rehab work. You'd have to buy that project and say, hey, I know I'm moving my business from fix and flips to ground up, but at least I have some experience doing these heavy renovations that I can use to apply to my ground up construction product.
Ground up construction is not a place for inexperienced investors. It is a place for experienced investors. And at Templeview, we never want to put you in a situation where the outcome is iffy. We want the outcome to be certain for all parties. We want your profit to be really nailed down. We want this to be a successful project. So that's why we're a little bit more particular on our experience for ground up.
Very good. Very good. Okay, Roger Benjamin. I think you answered this question already, guys, but I'm not sure about the DACA. Do you lend for foreign nationals or individuals enrolled in a DACA?
DACA in this case is DACA.
Okay.
Right. That's really what Roger's asking about. And in that case, part of DACA is becoming a citizen, right? So if you're a citizen, you're good. And if you're not, you need to have the right to permanently reside in the United States. That's our cut line there. So don't want to get too much into DACA. I know it's a hot issue, but again, DACA does provide a path for people to get citizenship.
Very clear. Thank you, Doug. Matthew Price, how do I become a TPO for Templeview?
Brendan, you want to take a swing at this?
Yeah, absolutely. So we would want to talk, right? Mark talked about, not only an interview process, but just seeing some of the business. We have multiple different options at TVC. We have a retail broker in which we let you utilize staff, right? We have a processor that'll collect the documents for you. We'll order the items for you. We have a table funding channel in which you're using your own product, you're originating. You're coming to closing with your name on the docs, and we're underwriting your file, right? And we're funding it at the closing table. And then we even have a correspondent channel where we're purchasing loans. So we would talk to you, kind of see where you best fit, and just sign up. It starts with an application, right? Whether you're a borrower applying for a loan, broker applying, or a table funder applying, it all starts with an application.
Thank you, Brendan. An anonymous attendee, thank you. That was helpful. I guess for one of the past questions, if possible, can you share links to the specific meetup groups Doug and Mark referenced in their responses?
Absolutely. We'll provide these after, and I think it refers to when I was saying for a first timer, go to one of your meetups, go ahead and meet some seasoned investors, partner with them, and we'd be happy to provide that. So after this, we'll provide that information.
Okay, and I know that Michael Labaz, he asked the question earlier, so I guess he's implying this. I do both flip and build new. So thank you, Michael.
Perfect.
Philip's back. Will TVC fund projects when a 1031 exchange is involved?
Mark, you want to take this?
Oh yeah, we will absolutely do. I mean, 1031s are fine. Again, we never source our seasoned funds, right? If you have a 1031, we will absolutely use 1031 money for sure. There's no problem at all. And that's the other thing too. Like, remember, all the stuff that we have, most of the time when you see big deposits, a bank statement or something like that, you got to source where it came from and then make a LOX. Listen, we just make it simple. We don't ask for the bank statement, right? We're good. We want you to know what you're bringing to the table, but there's a checks and balance when, you know, the money that you have is investor driven or a partner or somebody else that's working with you. We've decided in our underwrite that, hey, that's an extra check for us, right? That person's going to keep you in line. You did this, this is letting you a bunch of money, right? So they're going to keep you in line as an extra check and balance. So, you know, that's kind of why we do that. I did put in the chat a link to my my last meetup for Investors Edge. You know, we're doing them online, so you guys, anybody on this call can check it out.
That's the kind of response time we like, Mark. I love it.
Okay. Michael Abbas again. Can you refinance a ground up loan mid-construction?
Brendan, all yours, buddy.
Yeah, typically do not like midstream construction loans. There is some situations in which we'll them. Most midstream construction implies that there was a failure with the previous lender, right? They got a loan to rehab a property and it's not working out and need to get a new loan. Maybe they ran out of funds. They didn't properly vet the rehab budget. Maybe it was far more extensive and they didn't have the experience to really understand what they were getting into. There's a number of different reasons and red flags that pop up for a midstream construction program. And that's just the risk piece of it. If you go to just getting a value for that, where are you going to find comparables for another midstream construction project that has sold, right? You're not going to get a good appraisal for that transaction.
All right, so that is the ops response. I'm going to give you the sales response. So the long and short is, how much equity does he have, right? A good deal will always get funded. So you might say to yourself, you know, again, if he has a hard money loan on there, you know, he might have to bring a boatload of cash to do the deal because of what the as-is value is. So if the as-is value is greatly increased by what he's done, and in ground up project, you usually see that, right? They put a lot of their own money into it, and they might not have leverage. And so that's a deal we'll do all day. Like if you don't have a leverage and you're self-funding a ground up and you're out of money, yeah, all day long, we're going to do that deal. There's no loan, right? And really the response is, I would love to get financing for the rest. And that this happens all the time because people take on a ground up, they have the cash to do it, and it just wasn't projected properly. But guess what? You've created value. So we'll give you a loan on that. If you did a loan and the loan is ballooned, okay, how much money do you owe and what is the as-is value? To what Brendan said, you know, typically if we see it's a failed project or something like that, or a bailout or something, that's when we're going to say no. But you might just be someone that had a 6-month loan. I have lenders, like short-term lenders, that just do 6-month loans, and they in the extend they charge 2 points and it's 90 days. And if you do that, sometimes it makes sense when you're doing a pretty substantial project to kind of see what else is out there. So a good deal always gets funded, and always call your sales guy.
Yeah, I'll add on to that. Just so you guys, everybody knows, Mark's closing multiple huge opportunities this month that were great opportunities for us that are mid rehabs. But you really need to have somebody that can qualify that deal, vet it out, and that's part of having these experts on our sales staff that can take that and tell you right up front whether or not we're going to be able to do it, and if we do it, this is how it would look. Can we work?
Very good point.
Very good, guys.
Call us and we'll vet it.
There's a lot of questions here. Very, very good, guys. Hey, it's good to see Philip back again. Is the ground up program a competitive program for the new build communities?
Mark, do you want to take that one?
What was the question?
Is the ground up program a competitive program for the new build communities?
We are not. New build, like development products, we're not really the partner there. We're the partner for a spec build. If you have like 5 or 6 lots, build one and then do another one, yes, but not the big development.
Thank you, Mark. Tom Fritz, do you require source of seasoning on long-term rental loans, purchase loans?
Brendan?
So we don't source or season. We do require to see that you have, right now we require that to see that you have enough cash to close. What that looks like is a screenshot of your account balance in your statement. As long as we can link it back to the borrower, we can see their account number, we the borrower's name and how much cash they have. As long as that exceeds the cash to close, that's all we're looking for.
Mm-hmm.
Thank you, Brendan. Guys, do you have more time? Want to hang out and do the chats?
Sure, let's do a few more.
Okay, let's jump on over to chats. We have some questions over here. Hi, good luck. Michael Fonville. I'm a new investor. If I don't have 20% to put down, and would be my option to get a loan. I guess that's what he's trying to say. I'm a new investor, and if I don't have 20% to put down, I guess would that be my option to get it? Would it be an option to get a loan?
Mark, what do you think, buddy?
Yeah, we kind of covered this, and this was an
Good.
older question, but really, you could, if you don't have 20%, I mean, listen, my first loan that I ever did as an investor, I mean, the guy, I call it the Tony Soprano loan. It was 4%. I mean, sorry, 14%, 4 points. You know, he lent me the money directly, and they used the ARV. But like, that's just how it works. I mean, you know, if you don't have 20%, but you have a good deal, I'll go back to what I said earlier. A good deal always gets funded. So, you know, you go to a local meetup and you talk to a couple of people that are in the space. You know, doing a joint venture with someone with experience is what I would recommend. You know, if you're a newbie and you got to pay 20% and you don't even have 20%, but you have a deal, I'll partner with you right now. I don't even know who you are. If I'll underwrite that deal, I'll partner with you. And then you like go through that process of what I do to underwrite a deal. You might discover that it's really not as good as a deal as you think it is. Because, you know, when you get someone that has experience telling you that this is a great deal, hey, it's a great deal. If someone's saying it's mediocre or not willing to jump in bed and invest with you, you should double think that. So that's the only thing I would say with someone that doesn't have the experience. You usually don't know what a good deal is. I mean, I see it all the time. Oh, you know, I'm buying a house for 80,000. I'm going to put 30,000 into it. It's going to be worth 160. Well, hey, that's a horrible deal. That's a really bad return on your money. If you're going to turn that into a rental, you know, maybe we'll consider that. But again, other than that, it's, you know, if you're looking for a flip, not really a good deal. So that's the only thing I would tell you. I would say, because we don't source our seasoned funds to close, to answer your question, if you don't have 20% down, you can get a transactional finance, someone to give you cash, partner with you, and that is as good as cash. But yeah, I mean, other than that, it's experience to get the 10% down.
Thank you, Mark. Tim Burrell again. In order to qualify for a ground up loan, do I need to have done other ground ups projects recently? Can I use a large fix and flip experience to qualify?
I feel like we kind of answered that, Anthony, a little bit.
Okay, good.
The experience. Yeah, I think
very
we're
good.
There.
Okay, James Clifford to everyone. I guess a website for rental comps. I guess he's asking for a website.
That's that was DNA that's right ahead of it. Brendan, if you look in the chat, Brendan put that in there. So that's where you can go. That's where we get our comps. And that's how we derive the income we're going to use to qualify for our DSCR loans on short-term rentals.
Got it. Selena, I guess, can you talk more about long-term rental loans? Did you guys touch that already?
I think we did. And ultimately, I mean, there's some other comments in there too about, you know, how do I get signed up to be a broker if I don't meet the minimums? Call us, right? So if you have specific questions about long-term loans, we love talking about this. Hopefully we covered that. This was a little bit earlier in the presentation. We were on the short-term side. So hope we covered that, but we'd love to engage anyone on this chat and on this webinar in these chats that wants to talk more about finance. It's what we do. It's what we love.
And Anthony, I'll plug our next thing that we are doing with myself and Matt Swagel. We're actually talking about short-term rental loans and short-term rentals in general. So that, I think that's taking place in May, if I'm not mistaken. So a little plug there for the good old NYC real estate network. So
yeah, that'd be very good. Yes, of course. Yeah, that's very good. Over here, let me just see. I'm not sure. Do you still get a 107 on appraisal?
It's a form 1007, Anthony, that they're asking up there. It's a schedule of comparable rents. That is something we still get on our short-term rentals. It's part of the appraisal requirements, but it's not what we use to qualify the borrower or calculate our DSCR.
Okay, good. All right. And this is Nan, I guess. Will we get a recording? Oh, yes, Nan, of course. You'll definitely get a recording. Give us about 2 days and we'll edit it and you'll get a nice recording. Okay, Matt, I'm sure your last name. I'm doing a BRRRR on a short-term rental and 90,000 of a rehab work should be done in early May. when should I apply for your refund loan product? Do I need to wait until the rehab work is completed?
I did reply to that because I didn't know you were going through these, but
Got it. Okay, good. Okay, good.
no, that's fine. So Matt, really, you know, to get max leverage to 80%, we wanted to see, you want to be rented. So you want to wait till your rehab is complete. Once you have this property rented for sale, then you can go up to 80% and we can give you all the money, you know, that you put to buy it and any out of pocket unfinanced rehab.
We can do loans on unfinanced or unleased properties, no question. But if you want max leverage, what Mark is saying, have that thing be leased out.
And to your point, Matt, you can call us when you're about to be finished, because at the end of the day, when you get max leverage, you just have to have proof of your security deposit and first month's rent. So I've got someone right now that finished, it rented last week, and you know, the appraisal was done last week too. So, I mean, we got the appraisal done, it was vacant, and we just put a LOX that, it's just being rented right now, and we show proof of rental, and then they got max leverage to 80.
Okay, that's great. Philip loves you guys. Thanks for answering all my
Hey,
questions.
Philip, thanks for being so engaged in the webinar, buddy. You've been driving it.
Well, listen, Philip's back again. Well, let's connect afterwards and have a good group. MLLs, 25s. We need to look training. Okay, this is Philip again. Chris, who do we send a broker deals if we don't yet qualify for TPO? Did you guys answer this one?
We did a little bit, and I'll just put an exclamation point on it. Please call us. We'll point you in the right direction.
Yep.
We don't expect you to self-filter, whether you are an investor / borrower looking to get a loan for yourself, whether you are a broker or lender looking to partner up with us, just give us a call. We're really friendly. We love talking about this. We'll absolutely point you in the right direction.
Great. Thank you, Doug. Use them again. Mark referenced partnering as an option for brokers that are starting out with the fix and flip lending. How do we get started? We're going to end with that question. Yeah.
Well, you got our email addresses in the beginning of this, and our contact information. Just send us an email. I mean, Doug is the head of TPO too, so like, you know, if Doug sees an email or come in on our website, you know, he'll direct it to, you know, a broker. I can do broker business for anyone that's looking to get started, and we've got plenty of salespeople. So again, we want you to set you up with the right person that's going to give you the attention that you need. So it just depends on who you are and what you're looking to do.
Reach out, make contact with us. You can call us. You can go to our contact us page on our website. You can email us. As Mark said, we were very eager to handle those inquiries, and we love talking about this. We're here to help.
Guys, this actually concludes our webinar here. We thank you so much. As Mark, what he mentioned, he will be back in May on their final webinar with us. They also have a web talk where I believe Mark will be answering questions. I guess Mark and Doug and Brendan will be back. This will be an open live conversation. All pictures will appear. There will be many questions. I got a feeling this is going to be a very big one. Their panel, their advertisement should be coming in soon, so we will be posting it very shortly. And that will be in April. They will also be back with us with the CEO presentation. Their owner of their company will deliver a message as to how they made out in 22 in their vision for 23. This will conclude everything. Ashley over here at Temple View will be sending out a list of questions that we just went over. Again, contact information as to who to contact. Continue asking the guys questions. There was a lot of questions today, but please continue to ask them more questions and get involved with Temple View Capital. Guys, thank you so much. This was a great webinar. Thanks
for hosting us, Anthony. Thank you, Mark.
Thanks, everybody.
Thanks,
Thank
guys.
you, everybody.
Take care.